CBC Newsroom.
Welcome back. You're watching CBC News Today. I'm Harry Forrestel. Real estate is usually the biggest purchase you'll ever make, so it's alarming to see the value of your family home sliding away. House prices in Canada are dropping and sales are at a 20-year low. So who's doing well in this market and who needs to watch out? I'm joined by two mortgage brokers in Canada's biggest markets. John Charbonneau is based in Vancouver. Ranjit Dhaliwal is a broker in the Toronto area. Gentlemen, great to see you. Ranjit, let me begin with you. Who's really getting pummeled right now in this downturn, especially in the Toronto area?
Well, first of all, it's nice to be here, Harry.
Yeah.
And I think a lot of the people that have booked condos or homes in anticipation of market prices going up, and I think some of those people are getting hurt. And also the people that have booked homes some time ago and their closings are coming up and the appraisal values are not there. They are basically being hurt right now.
John, what about you? What's the story in Vancouver? Because, of course, it had one of the biggest real estate bubbles in the business, didn't it?
Phenomenal real estate bubble out here. I would agree with what Ranjit was saying about the people that have bought condominiums and in the pre-sale stage. The people that I'm finding, experiencing difficulty right now are those people that have their home listed for sale and have contracts to buy other homes, and they don't have the money to be able to complete on the sale of the new home without selling the first home. And because sales are down, it's just taking forever to sell a home. So there's a lot of people that are going to be in a situation where they will have to carry two mortgages, and unfortunately some people won't qualify to carry two mortgages, so they might be sitting on a house of cards.
Well, I was just going to... Go ahead.
The other person that I feel a little bit of empathy for is the older retired person that wants to sell their big home that they're finding hard to maintain and move to something smaller, and they're seeing a big erosion of their equity.
How are the banks responding to people, the kinds of people you're talking about, gentlemen? Ranjit, let me start with you.
Well, the banks are they're a little bit limited in terms of what they can do. However, what I'm hearing is they are trying to work with some of the builders to see if anything can be done. Now, I'm hearing that some of the builders are working with the banks in terms of sometimes possibly reducing the prices or sometimes giving these vendor take-backs mortgages from themselves in order to make up the difference in whatever the amount that the prices fell by. But however, when we compare to our American counterparts, I think they're probably passing along the savings much more to the consumers than the Canadian banks are. Canadian banks are saying that their spreads are tightening, their cost of funds are going up, and they haven't, as you know, they haven't passed along the entire savings that the Bank of Canada announced last week. And so, however, their explanations don't seem to really jive with Canadians, because in America, in the U.S., the banks have they're giving out higher interest rates for the GICs, and they're offering lower interest rates on the mortgages. And the banks in the States seem to be weaker than the banks here in Canada. So I don't seem to understand. I think there needs to be a lot of political pressure for the banks in order to
here in Canada
match. Yes.
Yeah. But and even with that, though, John, I'm reading and hearing that, you know, if you're ever going to buy a home, now is the time to do it. Is that just a pipe dream of real estate agents, or is this really a good time to find a bargain?
Well, it's a great question, and I think it really depends on your individual circumstances. If you're a first-time home buyer, you've never been in the market, you have a little bit of a down payment saved up, and you've got some good job stability, I think it's a great time to be buying. Who doesn't like to buy when prices are on sale? And that's exactly what's happening in this market. Prices are on sale. They're down an average of 12%. You can buy something today at less than what you did a year ago. Now, it's a good time to buy if you're going to stay in the market for a while. If you were planning on buying and flipping a property, no, not a good time to buy at all.
Ranjit, how about you? I mean, if I were a first-time home buyer, I know the conversation I'd be having with my wife would be me saying, no, honey, let's hang on another 6 months. Prices will continue to drop.
You're absolutely right, Harry. These kinds of conversations are taking place all over the country, and as John has said, prices have come down as much as 12% in certain areas, and certain economists believe that they may continue to go down. For example, CIBC's Benjamin Tell is saying that they may go down another 10%. Now, if you take a look at that, I've done some numbers on this, and if there's the average mortgage here in the GTA for us is about $275,000. So if the prices were to drop, the average mortgage is going to be somewhere around $250,000. Now, at today's 5-year rate, through a mortgage broker, you should be able to get a 5-year fixed rate mortgage at around 4.75%. Now, if you take a look at that, the monthly payment on a 30-year mortgage is somewhere around $1,425, $1,426. Now, the prices may come down next year, but there may be a possibility of the interest rates going up.
I see.
So if the interest rates go up to as much as, let's say, 5.5%, there's not going to be much of a saving, even though there may be price drops next year. The savings is only going to be 50 cents a day. So do you really want to pass up on the chance of finding the ideal property for yourself for the sake of 50 cents a day? So I would tend to agree with John. There are opportunities out there that people should be aggressively looking at a lot of good deals coming out in the marketplace right now.
But speculators beware. That's the key thing.
Absolutely.
John, let me ask you something. I just heard Ranjit say, an offer, a 5-year closed mortgage at 4.75%. That's a pretty good number. Is that who's sitting pretty right now? Anyone who is about to renegotiate their mortgage?
Well, I think the people that are renewing their mortgage today that got them 5 years ago, they're actually seeing the interest rates comparable today with what they were 5 years ago.
Right.
The people that are probably going to be a little bit sad are people that have variable rate mortgages that were arranged up to 4 years ago and 5 years ago when the interest rates were prime minus 0.9% or prime minus 3/4.
Yeah.
Somebody's got a variable rate mortgage today at 2 3/4%, and they're going to be renewing on a variable rate mortgage at 4.5%. They're the ones that aren't happy. Another interesting thing about the world liquidity crisis is we've lost 16 different lenders in the last 12 months, lenders that used to provide financing for the more challenged, and they're not there anymore. So there's a lot of people that can't get into the market today because the right lender's not available.
Very interesting insight from you both, gentlemen. I want to thank you very much. Good talking to you.
It's been a pleasure.
My pleasure.
John Charbonneau is a broker with the Mortgage Group. He joined me from Vancouver. Ranjit Dhaliwal is a broker with Mortgage Intelligence in Toronto. And some breaking business news to tell you about this hour. The Newfoundland and Labrador government has just passed legislation to expropriate the hydroelectricity and timber rights from a Montreal-based forest products company. Abitibi